Hello everyone, this is CA Devang Kothari and welcome to another episode in my series of Cost-O-Logy. Cost-O-Logy is the series where I conduct sessions regarding various interesting terms in costing. Yeah. Before we get into today's interesting term, certain important announcements for you guys. Well, announcements that we have launched the all-star batch for CA final students. Yes, we have just launched the all-star batch for CA final group 2 students only on Unacademy. It is applicable for students appearing in May 22 and November 22 exams. The batches have already started from 3rd of November. Yeah, group 2, three subjects we have started so far, that is DT will be taken by Durgesh sir and also DT to be taken by Ronak Mehta sir. Both batches have already started. You can choose any faculty you want. Yeah. IDT also started by Mohammad Rafi sir, and costing sessions will be started by me, will be going to be started by me, and it will start from the first week of December. Yeah, but DT IDT has already started. Costing will be starting around first week of December for the May 22 November 22 exam students. Okay. You need one subscription. For that one subscription will give you multiple benefits, like number one, you can attend live interactive sessions. Yes, if at all you miss the live sessions, then you can always go for the recorded sessions. Yes, you'll get multiple educators in each subject. Like for DT itself, you have Durgesh sir or Ronak Mehta sir. Both batches have already started. You can get doubt solving sessions every week, and you will have practice mock test series also. Yeah, these guys have been our proud learners who have succeeded with an academy coaching. So hopefully next will be your picture on this wall here. Yeah. You need a subscription for that. For a subscription, you can use code Yashas. Using code Yashas, you'll get 10% discount on that subscription. You can also go for combo subscription, group 1 plus group 2 combo. For combo also, you can use code Yashas to get 10% discount. Plus, we have just launched Iconic program also. Iconic subscription, Iconic program. Iconic is a premium subscription for CA final. Iconic was already there for CA intermediate and CA foundation. It's very successful there. But CA final, we did not have Iconic program. Now it has just been launched. Now what is under the Iconic program? Iconic subscription will have little higher charges like these, but in these charges also you can pay 10%, you can get 10% discount by using code Yashas. Yes, same code Yashas you use will give you 10% further discount. But what extra do you get here? Well, under the Iconic program, you get live mentoring platform. Live mentoring will involve certain special features, like number one, personal coaching. There will be a person, an expert designated for your help. This person can give you personal guidance. This person will give you one-to-one strategy building sessions. He will help you out in drafting your entire strategy of studies. Yeah, plus there will be one person who will be appointed for dedicatedly for your doubt solving, one-to-one doubt solving. Yeah, evaluated test series will be there. Yes, tests will be conducted and the papers will be evaluated also. Yes, papers will be checked. Plus, you will be given printed copies of the books material, not the soft copies, printed copies of the material you will be given. And you may have industry expert sessions also which are conducted. Plus, you have the regular benefits of Plus subscription. Yes, all the routine benefits of Plus subscription, that is live classes, weekly tests, also study materials, soft copies you will still be given. Unlimited times you can access the classes, and the biggest advantage is structured courses. Yes, on that Plus subscription, you get proper structured full syllabus completion courses. You will not have to search for different chapters and all. You'll have an organized way of covering the entire syllabus, structured courses there. Okay? Under the live mentoring program, you'll have evaluated test series. Evaluated test series meaning you'll be having a set of three exams which are conducted. First exam at 40% syllabus completion, second exam at 60% syllabus completion, third exam at 100% syllabus completion. Yeah, all these exams will be followed by an analysis class. Yeah, analysis class where I will analyze the entire paper for you, where I will be analyzing the entire paper for you, will be discussing the answers and all. And plus, after the paper checking, you will also be given feedback from the expert regarding your performance, will be given feedback by the expert regarding how well did you perform in the paper. Done? Yes, this is the iconic program, and trust me, it doesn't get better than this. Yeah. Okay. Anyways, getting back to our term for the today, my Cost-O-Logy term for today. So my term for today is a term called economic value added, EVA. Now EVA is a part of your chapter called as performance measurement and evaluation. It's a chapter in your CA final costing syllabus. So EVA is what? It is known as economic value added. It is used as a financial performance measure. Your chapter contains financial measures of performance, non-financial measures of performance. EVA is a method of evaluating performance using financial factors, like evaluating performance of a company or evaluating performance of divisions within the company. Division performance or company performance is evaluated using profits, like the division which earns more profit is performing well, but profits can be measured in terms of EVA. So EVA is a method to evaluate performance of a division. EVA by formula, by calculation, goes like this. It is net operating profit after tax minus weighted average cost of capital into capital, NOPAT. NOPAT is an important term over here. NOPAT is net cash operating profit after tax. It has to be cash profit, it has to be operating profit, and it has to be the profit after tax for the current year. It will be the profit of the current year. So in current year, how much cash operating profit did I generate? That is my NOPAT. And capital that I take here should be the opening capital of current year, not the closing, not the average. It has to be the opening capital of current year, or you can take that is closing capital of previous year. Why? Because this year whatever profit I generated, my current year profits were generated based on the capital which I had at the beginning of the year. Yes, my current year profits are earned on the money invested since the beginning of the year. Beginning of the year means opening capital. So be very clear, the NOPAT that you take will be the NOPAT of current year, and the capital that you take will be the opening capital. And what does basically this indicate? This WACC into capital indicates that on this opening capital during the year, this much is my cost of capital. WACC is weighted average cost of capital. So on my capital, I have incurred so much cost of capital, and this cost of capital is basically deducted from my NOPAT. What remains is my economic value added. Now for calculation, we'll be learning two things: how to calculate and what is the meaning of this EVA. For calculation work, I give you the formula, I tell you what is NOPAT and capital, plus I teach you some adjustments. My NOPAT should be cash profit, operating profit. So if you are given any non-cash items in the current year P&L, and if any non-operating items given in the current year P&L, then they must be reversed. Similarly, if any non-operating non-cash items were there in a previous year P&L, then it must be reversed. That must be reversed while calculating the capital. Yes, my non-operating non-cash items must be reversed, but my non-operating non-cash items of the current year will be reversed in the NOPAT calculation, and non-operating non-cash items of previous year are reversed in a capital calculation. This is something which most of students miss. So please be very careful with that. Okay. Also depreciation. Well, although depreciation is a non-cash expense, still depreciation will be considered here. But instead of considering accounting depreciation, we will replace that and put economic depreciation here. If the question does not mention economic depreciation, then assume economic depreciation is the same as accounting depreciation. Okay? Yeah. Now, NOPAT that I get here is to be adjusted for this non-operating non-cash items. But after adjustment, how to calculate NOPAT? Well, after adjustment, you get profit before interest and tax. after the above adjustments. From that, you minus the tax at the rate of tax percentage. Simple. You simply minus the tax at the rate of tax percentage. Do not give effect of interest on taxation. Yes, my interest should not affect taxation. Interest should not affect the NOPAT. NOPAT is supposed to be operating profit. And operating profit means profit from my routine operations. It must not be affected by interest cost. Now, if it is not affected by interest cost, then it should also not be affected by tax saved on interest. So assume that you don't pay any interest and assume that there is not even any tax saved on interest. My NOPAT calculation is an operating profit. It should have zero impact of any mode of financing. So if your financing contains debt financing must not affect my NOPAT. Neither should interest affect the NOPAT, nor should the tax saved on interest affect the NOPAT. So in reality, even if you save tax on interest, still while calculating NOPAT, you consider that tax is not saved on interest. You consider that you pay the tax on the entire value, on the entire profit without removing interest. Done. This is also something new. You should be careful. Now, what does this EVA indicate? So far, what we did was calculation. This was pertaining to calculation. This was my calculation of EVA. Next, we learned meaning of EVA, meaning and interpretation. EVA indicates the wealth that is created for the company, wealth which is created for the shareholders. Because they go out of the profit, out of this NOPAT profit, after I remove the capital cost, then the money which remains belongs to whom? Now the remaining money belongs to the shareholders. And this remaining money is like the surplus extra that I give to the shareholders. I have already given the shareholders minimum required rate of return. This WACC already contains minimum required return of the shareholders, but after that EVA that remains is the surplus that I have even more further for the shareholders. So if the shareholders are given surplus, given extra, that will increase the value of the shareholders. It will increase your share value. It will increase your value of the company. It will create wealth for the company. Yes, so EVA, that surplus of EVA indicates the wealth which is created for the company. It indicates excess of profit over and above the capital cost. Yeah, it is my excess of profit over and above the capital cost. Done? Yes, this is my concept of EVA. For this, you may get practical questions, but more important will be the analysis, will be the interpretation that I gave you here. Done? Yes, that's all. Thank you very much. See you in my next episode. Bye bye.